Hi everyone. Today I'll be talking about the introduction to financial accounting. This will be a crash course, and after this session, you will be able to know the basic of the introduction to major concepts of trial balance, T accounts and journal entries examples, trial balance explanation, balance sheet explanation, and finally the differences between trial balance and balance sheet. We'll start off by introducing the major concept of double entry account. So every transaction affects the accounting in at least two ways. It'll be a debit and credit, and will always be equal. It's a self-balancing system, followed by the T account. It's a visual representation for debits and credits. On the right side, you'll see the T account. It's basically a letter T with left side debit and right side credit. This is very important. You should definitely remember this because you'll be using this a lot throughout the whole accounting period. And third, you'll be doing the accounting equation. It's always going to be asset equals to liabilities plus equity. It's going to be balanced. So these are the examples of T accounts. You have the asset and expensive, which is increased on the debit side, and the liabilities, revenue, and owner's equity will be increased on the credit side. Another example of the T accounts and journal entry. So in this example that I've provided, Alex buys supplies for 7,000 on credit. So you open two T account, one is for supply, and it says that Alex buy it on credit, so it'll be account payable. Alex will pay in the future, so it'll be supply increase, so debit increase, and account payable. You will receive your payment in the future, $7,000 on the right side. And the journal entry for this example will be, you can see supply on the account section. You can see supply and account payable, which the account payable is on credit. So you will have like a slight indentation, and you will write debit 7,000 and credit 7,000. So this is the example of trial balance. As you can see, I've also included an example of Paul's Guitar Shop trial balance sheet. And the definition of trial balance will be a listing of all ledgers account along with their respective debit or credit balances for their period. And the purpose of trial balance is you can always run a trial balance to check your work in progress balance. And this is only for internal accounting report. All right, for balance sheet, it is an overview of what company owns and what company owes at a point in time. So it's sorted in asset on the top, liabilities, and owner's equity at the bottom, and it should always balance the asset and the liability plus owner's equity. Can be used for internal or external. And I've also shown an example on the right side for you. And how is the balance sheet derived from trial balance? Only assets, liabilities, and owner equities from T account go directly to the balance sheet. Nothing else should be included. And as I mentioned, the asset must be balanced with the liability plus the equities. And also it's the final trial balance, will be constructing it into the balance sheet. So finally, the differences between the trial balance and balance sheet is trial balance has more accounts listed, and it's used earlier in the accounting process, and it's used for only internal purposes. For balance sheet, it's a financial statement. It's best viewed on an aggregated level. And that's it for my presentation. I hope you've learned something. This is the basic, but the most important things for the financial and accounting. And these are my references. Thank you guys.